Okay, welcome back everyone. So we're going to continue now with question 2 and now go do the physical calculations based on the information we've read through. Okay, so we said for the sales, the local and the export sales, you would have to go split it between the two amounts by showing your local sales is the 926,000 and you multiply it with 15 over 115 because the amounts are inclusive of VAT. And then your export sales you would show is zero rated and it would have an amount of 0. Now for each of those you would score a mark in this question. Then point 2, we said we've got the bank statement, so we've got the bank charges and we've got the interest earned. Now your interest earned or your interest income is a financial service and thus is an exempt supply. So it would also be a 0 under your output VAT. Whereas your bank charges would be a standard rated supply and you would be able to deduct the 950 times the 15 over 115 from your input VAT. Okay, now in this question you can see output VAT, I've clearly made it a positive, input VAT, I've made it a negative. Now the reason I've done this is so that I know what needs to be added, what needs to be deducted. If you do both of them positives, you will still get the marks as long as when you get to the bottom part where you have to work out the net VAT payable, you deduct the input VAT from the output VAT. Okay, so you will not be penalized if you make both of them positive and then apply it correctly at the end. Okay, then point number 3 we said is the microwave, which was for entertainment. So you show the microwave, but you then indicate that it is entertainment. So for that reason, input VAT is denied. So you show a 0 in your calculation. Then number 4 was the rental of the shop premises. So what you had to see there specifically is the rental amount was per month. And they stated that our VAT return is a 2-month VAT return. So for that reason, you have to multiply that amount with 2. Okay, so you'll see this is 1.5 marks. So you would have received half a mark for the 36,000, half a mark for the 2, and then 15 over 115 would have been another half a mark. Okay. So even if you missed the 2, you would have been able to get a full mark for that calculation. Then point number 5 was the insurance. Now we said the insurance for your motor vehicles, even though the input VAT for the motor vehicle itself is denied, you will still be able to claim the input VAT for the insurance. So for that reason, you add all the insurance amounts together, which is the 3,800 as well as the 12,000 together, and then you apply the VAT. Okay. You could have also shown it separately, but from a time point perspective, you do not have time to go write stuff in duplicate, so it is quicker just to add them together. But remember to show me your calculations. Why do I say that? If, let's say, for example, you left out the motor vehicle, you would still be able to get the full mark for the other insurance that you've included. So remember your calculations is important in your exam so that we can apply method marks if you make mistakes. Then number 6 was the company issued shares. Now if we issue shares, we get money from the share issue. So we put it under output VAT, but it is also a financial service, so it is also an exempt supply and it will not affect your output VAT. So it's also 0. Then the next item, number 7, was your double cab bakkie, which was purchased. Now we said a double cab bakkie is a motor car as defined. A single cab would not be classified as a motor car if they ask it in the exam. So your double cab is a motor car as defined, and therefore the input VAT is denied. Okay, so it's also 0. Then if you see anything second hand, make sure if it's from a non-vendor, you can claim the notional input VAT. If it's not from a non-vendor, then you cannot claim the notional input VAT. So for the bed, let's quickly see, note rates and taxes. Okay, so the bed's purchase was second hand. So remember, the amount is considered as if it already includes VAT. So therefore, we will deduct it. Okay, then the next item was the hailstorm, the repairs amount. Now, remember that amount was excluding VAT. So the rate you are going to apply for your input VAT is 15% as opposed to the 15.00115. So here we are testing, do you know how to apply the VAT inclusive or the VAT exclusive rate to get to the VAT amount? Okay. Then point 10 was your delivery vehicle that was sold to a non-vendor. Okay, so it's a sale, so it is income. Now, because of the fact that a delivery vehicle is not defined as a motor vehicle, you would have been able to claim the input VAT. So when you sell it then, you have to raise the output VAT. If we sold the double cab bakkie, on the other hand, we would not have to raise output VAT because input VAT was denied. So where we now say it's not a motor car, thus VAT is levied, your answer would be if we sold a double cab, for example, you would have said it is a motor car as defined, so no VAT is levied. Okay, so then you would show a 0. Okay, and the amount is inclusive of VAT, so we multiply it with 15/115. Then the new office chairs, we said because of the fact that they gave you dates in February, you had to go look at the general rule. We apply VAT at the earlier of payment or invoice date. Now we were already invoiced in February. So for that reason, VAT is accounted for on the earlier of invoice and payment date. So you would not actually include an amount. Okay, so I've just put an additional note for you guys in here to say the input would have been claimed in the last VAT period when the company was invoiced, and therefore there's no calculation in the period. So that's why I haven't even included an amount. But if you showed a 0, it would also be correct. So you haven't physically included anything. Then the new mattress is important. Remember, what country are we importing it from? It was not one of the 4 countries where we do not have to add the additional 10%. So we include the 10%. So we take the import value. So the goods that we've imported, the customs duty value was 216,700. Okay, you would receive a half a mark for that. Then you will receive half a mark for increasing it by 10%, so adding an additional 10%. You would also then receive half a mark for including the import charges, and then that full thing needs to be multiplied with 15% to get to the deduction. So that calculation would add up to 2 marks. Okay, so let's say you forgot about the 10%, but you showed me the rest of the calculation, you would be able to score 1.5 marks if you show your calculation. If you just give me an amount, and the amount is incorrect, you do not actually get any method marks. Okay, then the next one was salaries and wages. Now remember, salaries and wages does not have any VAT on it, so it is the reason for it. It is excluded as it is excluded from the definition of an enterprise. So remember, you can only claim input VAT if it is part of your enterprise. Now they exclude salaries and wages from that definition specifically. Then your sales manager. Now this one you have to go split down and each and every component, because they were standard rated ones, they were exempt ones, they 0 rated. So for this one, you have to go indicate each and every one separately. So I'm just going to unhide all of it. So the first one is your car hire, which is a supply of a motor car for which input VAT is denied. So that one is a 0 for your car hire. Because of the VAT, because input VAT was denied, they would not be able to raise output VAT, so you wouldn't have been able to claim any input VAT. Fuel is 0 rated, so you say it is 0 rated and you show me a 0. Your car insurance, so even though a car input VAT is denied, we can still claim the VAT on the insurance amount, which is the 126 times the 15 over 115. The accommodation, now yeah, you had to multiply it with the number of nights he stayed in. They gave you a per night rate, so to get to the actual value, you have to do 980 times 6. If they give you a total value, you do not have to apply the number of days. Then meals, entertainment, input VAT is denied. Is not denied in this scenario because of the fact that it's a personal subsistence. So normally meals would be viewed as entertainment expenses and you would not be able to claim the input VAT, but because this employee had to travel for work to be away from his house and had to stay for more than one night, this would be classified as subsistence rather as entertainment. Then the Uber one is transport of a fare-paying passenger, and it's an exempt supply. And then your plane ticket is just a standard rated supply, and you would be able to claim the input VAT. And the last item that you need to just show is your depreciation and state that it is not no VAT because it's not a supply. Okay, so you do not have to show each and every depreciation amount separately. You just state the fact for depreciation as a whole. Okay, so that was all the items. Now the next steps you have to do, once you split it between income and input VAT, output VAT, you have to go add up your totals. Okay, so we take all the output VAT that we've raised and now we add it up to get total output VAT. Okay, and this memo, they did not give you any marks for that, but in some of the memos, they generally give you half a mark to a mark, depending on who the developer is. So you need to show it in the event that they actually do apply marks for it. And then you do the same for your total input VAT. And then your net VAT payable. If you did not do it as a negative, so you showed everything as a positive, then here at the bottom, you show me how you get to your net VAT payable. So you take the output VAT less the input VAT gives you the value. Now, if our input VAT was greater than the output VAT, it would not be payable, it would be refundable. So they normally give you a method mark for taking your amounts, and if you get it correct, then they generally give an accuracy mark as well. Okay. So let's say you made a mistake, you would still be able to get a mark for applying the principle correctly. You would just lose the 1 mark for the accuracy of it. Okay, then question 2.2, we said, when does the return need to be filed? Now we said electronic files is at the end of the month. So in this scenario, it would be end of it would be end of May because we would only do it in the following month. And then our payment is generally within 7 days. So because of the fact that they did not pay it on time, they would incur penalties and potential interest on that amount. Okay, so that was question 2. Do you guys have any questions on that or on this question before we move on? Okay, so the guys online, do you have any questions on question 2? Guys in class? You all okay?